This is Mark Putrino, and we're here to help you get through the market today. Mark, how are you this morning?
Well, I think I'm doing pretty good. Doing better
Awesome.
than Scam Bankman Freud's fraud's parents,
Oh,
FTX
did they get
sues.
them?
Let's see. This should be pretty interesting. I think this just came out. Let's see. FTX sues Sam Bankman Fraud's parents to recover misappropriated funds. And there is a picture of his father. Yeah, well, these people were attorneys, and it's like when people are making money, other people turn a blind eye to anything that looks like it's wrong or might be wrong. But then when things turn and people start losing money, then everyone sells each other out. There's no honor amongst thieves. A friend of
That's
mine who was
right.
a cop used to say. So let's see. Yeah, I mean, these people, they're attorneys. I mean, of course they knew something shady was going on. So let's see, they're trying to recover millions of dollars fraudulently transferred and misappropriated funds. Joseph Bankman and Barbara Freud, both Stanford law professors, exploited their excess. All right, not surprising. Let's see, go down here. Wow, he received a $10 million gift. Bankman received a $10 billion gift from Bankman Fraud in early 2022 after lobbying his son to increase his $200,000 salary. Okay. The funds for the gift originated from Alameda Research, which I guess is part of uh, part of
Yeah, part of the
FBI.
web. It's part of the connected web.
Let's see. So Bankman was deeply involved in FTX's operations. He managed the taxes, frequently participated in executive level discussions. Yeah, he knew what was up, man. He flew around on privately chartered jets, expensed $1,200 per night. And then this guy's got to be a bodyguard here because he's in like all the pictures. All right, well, whatever. Good, man. Hopefully this guy gets to go to jail.
Well, hopefully they'll start cleaning a little bit of that stuff up. But I doubt it. But, we can all
Well,
hope.
it's just these new things come along every 20 years or so. Who knows what the next one will be, right?
That's true.
All right, so Instacart looks like it's going to start trading today. See what's going on with that. And then we got the G20. We'll see how much Biden embarrasses us at 10 o'clock when he speaks, although I'm not going to be watching it. Grocery delivery company is valued at nearly $10 billion. Okay, so this is going to start trading today. So probably hasn't priced yet. So it'll start. What happens is they got to distribute the shares to whoever got them, whoever put in for them. Maple Bear. Well, wait a second. It looks like that symbol's already taken. They're going to trade under the symbol CART. CART. That's kind of weird. So that symbol's already taken. Oh, no, it's not.
No.
It comes up with Apple.
Mm-hmm.
Oh, you know what? That company must have been bought out by Apple. All right. So anyway, when we get closer to the morning, the brokers will start posting their bids and their offers. And yeah, I think what's kind of interesting about an IPO is you got to understand, right? Right now, the only people that own shares are people that had the shares given to them as part of the IPO. So when the market opens and people start selling, guess who's selling? The people that got the shares on the IPO. So, if it prices a lot above or if it trades at a much higher price than it priced at, then it's basically free money for these firms that get it. So it says like they raise their target rate to $28 a share. So just say hypothetically it prices at 28. Well, whoever gets the IPO, they're on their confirmation, they're going to get, you got 10,000 shares at $28 or whatever. Now, if it opens up at $38 and those people just go there and sell it, it's like free money. So there's a lot of controversy over this stuff because what happens is the firms that bring these places public, the investment bankers, they give a lot of shares to their best clients. And a lot of times the retail clients get shut out. So is it like, all right, well, I mean, I guess there's a lot of different ways you can look at it. But That's what happens. And a lot of these investment funds, they don't really try to swing for the bleachers. They just try to get singles, and they try to stay really close in line with their whatever their benchmark is. And then if they get a couple of these free money IPOs a year, each year, they usually get probably 2 or 3. That adds to your performance enough that it puts you ahead of the benchmark and it makes you look good. So that's just one of those things that goes on. All right, now let's see what else is going on here.
Hey, Mark,
I think
if a company like Apple buys Maple Bear and they get the ticker cart, are they allowed to keep that ticker until another company comes along and wants that ticker, and then the company has to buy that ticker from them? Is that like their own personal intellectual property?
I don't know, but I wouldn't think so.
Okay.
I think it's probably belongs to the exchange.
Okay.
But I'm not sure.
Yeah.
I'm not quite sure. But I mean, if you're listing on the exchange, like, then it's probably theirs, I would think.
Okay.
All right. So let me see here. We want to go look at oil, because oil is probably getting ready to where it's going to see a little bit of profit taking, right? 91.21. And we got this up here around 93. So we see how we get resistance at these former peaks, right down here. You get to a former peak and you get to resistance, former peak, you get to resistance. So the moral to the story here is that there tends to be resistance at former peaks. So if you buy something and it's going higher and you're wondering where should your sell target be, well, you can look at a former peak. Now, why would there be resistance at a former peak? Well, just think, there's people who bought here, right, who like regret their decision to do so when the price goes lower. So when it gets back up to their price, they sell, or they try to sell. So you get these remorseful or regretful buyers placing sell orders at the level that was resistance, and then this could keep the resistance intact for a long time. So you see this a lot. Something gets to a former peak and it runs into resistance. I mean, it's pretty apparent on this chart, right? You can't really debate it. Let's see. I think I'm going to see here. This was even a minor thing: resistance, then it became support. So here we can see how support can turn into resistance, and this is also buyer's remorse. People buy here and they regret their decision. They sell themselves out. They regret their decision, assuming they held on to it when the price goes lower. So they tell themselves, oh, if this gets back up to my buying price, I'm going to sell and get out at break even. So you have enough remorseful buyers placing a sell order at what was support. It turns into resistance. So buyer's remorse can keep resistance intact, and buyer's remorse can also turn support into resistance. So we got to understand that there are some price levels that are more important than others. And sometimes we know why, sometimes we don't, but I guess a way to think about it is like the particular security likes that level for some reason. See, some of these price levels aren't important. Like, so let's just say 77. Let's just put a line here on 77. Right? The stock or the oil gets to it and it just goes right through it. It's like it's not even there. Right? But when we get to 83.20, well, it reverses. So why is it 77 not important? I mean, who knows, right? But the good thing is we don't really need to know. Now, down here, you can also see kind of our opposite phenomena. This is our support, right? So you get people, now support can stay intact because of seller's remorse. People sell and then the price goes higher and they're like, damn, I made a mistake. I'm going to buy my oil back if I can get it at the same price I sold it at. So when it gets back down to the level that had been support, if you have enough of these remorseful sellers placing buy orders, what was support can convert into, not convert, but what was support can remain intact and stay intact for a while. So you got seller's remorse can turn support into support, or I should say can keep support intact. Then another thing you see on pretty much any chart, a lot of times when we get to resistance, we sell off, or we get to support and we rally. So how does this happen? Well, you get to support and there's a lot of buyers around. That's what support is. And eventually some of them decide to pay a little higher price to attract the sellers. And then other people see them doing that and they do the same, and it starts a snowball effect. And coming off of resistance, it's the opposite. You get seller and traders who want to sell, and they notice the price isn't going any higher, which means there must be new sellers coming into the market. And they decide that they want to undercut those sellers because the buyer is going to go to whoever has the lowest price. So some people sell at 83. Someone sees it, 83. I'm going to go lower my level to 82.75. Someone sees that, they go to 82.50, so forth and so on. So you can see this on pretty much any chart to some degree.
Mark, could you pull up the volume on that the middle support level that you have there? So this stock was going down heavily, and I guess that's a capitulation volume that turned that around.
On this one?
No, the middle support there.
Here?
The third S, the middle S. That one. Yeah, the volume right there. Because that started as an update and then finished as an update, correct?
Let's see here. Pain below. Yeah, I mean, there was a lot of volume, but it wasn't like tremendous amount. Oh wait, what do I have it already? It wasn't like tremendous.
It's just a day that
the price action is usually more important than the volume. So yeah, and maybe because this is oil, it's a little bit different than a stock. All right, so let's go look at the XLE and the energy ETF. Because if you don't trade oil, this is something you could look at if you buy puts, if you're an options buyer. So this trade's kind of like oil because most of the companies in it are based on oil, but it's not exactly like it because this also has natural gas in it. And I guess it probably has some kind of green energy thing too. But again, you see the same thing, right? You get to resistance and you sell it. You get to resistance at a former peak. You get to resistance at a former peak. Here you have your support converting into resistance. Down here you have your support staying in line. So I want to just get to oil. All right, so here's XLE, and then I'm going to bring up the oil chart again. C1. So you can just see how they're pretty similar. All right, so there's oil, and there's XLE. So now, if you want to get a different way of getting exposure to oil, is you got this USO ETF, right? If you're an options trader, this is something you could look at for buying some puts because it's designed to track the price of oil. I mean, it doesn't do it perfectly, but it's close enough for our purposes. You can also look at a couple of these inverse ETFs, right? Like DRIP is one that we looked at. So this follows the oil and gas exploration and production industry, which is part of the energy sector. But the point is if oil goes down, it's going to go down. If oil goes down, it's going to go up. See, it's inverse. When you see bear, that generally means inverse. And it's a 2x. So basically, if oil goes down by, say, 2%, this should probably go up by roughly 4%. And then what was the other one, too? Like, is it ERY? I think ERY. Yeah. Let's see here. Yeah, so this is the same thing, just by a different provider or company. So this ERY is the Direxon. And then, who is the DRIP? Oh, DRIP is Direxon too. So let's see. So that's daily energy bear, and this is daily, oil and gas exploration. So this tracks the energy sector. This tracks the oil and gas exploration industry, which is part of the energy sector. But as you can see, I mean, they're pretty much ERY. I mean, they're pretty correlated, right? I mean, it's almost like you can barely even tell the difference between them. So this tracks this ETF. This is inverse to XOP, which is the oil and gas exploration and product, right? So remember that this is meant to go inversely. So it's like a inverse mirror image. And I mean, if oil rolls over a little bit, right? This is testing a little bit of support. Could be a little bit of a move lower there. All right, so that's our energy sector. Now let's go take a look at natural gas, actually. But it's see, natural gas has just been, it's just really hasn't been doing much. It's just been in this like range for seemingly for like forever. I mean, we had this one little false breakout. But basically, natural gas has been in this range between I would say 250 and 280. So it's at 276. So it's been in the same range since June. I mean, I don't know why. With everything going on in the world, you would think it would be more volatile, but it's not. All right, now let's go see. Again, it should be it's gonna be another quiet day because it's the Jewish holidays. And then tomorrow we got our Fed, which is going to be like, oh, everyone's going to be watching the Fed and blah, blah, blah. So just another day of like, oh, what's Jerome Powell going to say? Blah, blah, blah. Let's hang on his every word. You know, we don't need to pay attention to him. We can see that we have inflation just by looking at the charts. I mean, we just saw oil moving higher, right? Natural gas, I suppose eventually it could break out sooner or later. But this year is like, look at what this is telling us about inflation. So anyway, my guess is the market goes down. Now let's go look at some of our different sectors here and industries. I think a very important key or very important thing to watch is what goes on with these banks. So KBE is an ETF that is designed to track the banking sector, or sorry, the banking industry. I'm sorry, I'm forgetting, I'm confused. Industries are part of sectors. All right. So this is part of the financial sector. And as you can see, this looks pretty weak. I mean, this was down 2% yesterday. And it looks like we're potentially breaking this support. We do have these lower highs here, right? See, this is a lower high than there. This is lower than there. This is lower than there. When you get a peak form at a lower level than a prior peak, we call that a lower high. And that tells us that the sellers are getting more aggressive. They're willing to accept lower prices. But meanwhile, down here, you have the buyers who have hung out around 38. Now, of course, you got buyers in between here too, but you got this large group of buyers that are determined to hang out at 38. Now, why are there buyers at 38? Well, because they were sellers at 38. So resistance here turned into support over here. I mean, this is a really clear example of look how, I mean, we're talking about an industry that's worth trillions of dollars, and yet somehow you get these exact precise levels. Now, this, like I said, looks pretty weak. I mean, it was down 2% yesterday. There's no rebound this morning. It's actually down even a little bit more. So this to me looks like it's gonna break this. I don't know if it's gonna happen today. Like I said, it's gonna be pretty low volume, but it just looks like the path of least resistance is down. You know, you got this like descending triangle type pattern here, right? Just like here, you had not a perfect pattern, but you see how you had a higher low. So this low was at a higher level than this low. This low was higher than here, and then this low was higher than here. So you get these higher lows, which is bullish. A lot of times when you get to resistance and you want to know if you're going to break it, if you see these higher lows leading up to it, it's a sign that there's a good chance it does, because you got your complacent sellers hanging out and you got your buyers who are becoming more aggressive, right? So now it's the opposite. You got your buyers who are complacent and hanging out, and your sellers are becoming more aggressive. They're willing to accept lower prices. Now, if we break through here, I don't really see anything that looks like it's going to be meaningful support till we get down pretty significant move, maybe 7-8%, maybe down to around here or down to around here. See this little low over here, but probably more like here. So that'll bring down the financials, and that'll bring down the rest of the market. So let's see where S&P is. We were watching on the SPY that 443 level. Yeah, see, look at that. So regardless of what you trade, you just should know this stuff is going on, because if all of a sudden you start to notice that SPY is like really starting to move lower with some kind of momentum, well, you can almost guarantee that it's because what's going on over with the bank stocks. So we got to remember that what we're looking at here is a combination of 11 sectors, and those sectors are all combinations of industries. So different things affect the market at different times. Now, sometimes it's probably not that important to watch the banks. Maybe they're just neutral. They're neutral. They're in the middle of a range. But when you see something testing an important level like we just did, it could make a move, right? When do things make moves? Well, when they're overbought or oversold and they're at support or resistance. That's when you really tend to make your moves. And so we're testing this. What are we doing in the pre-market? All right, basically unchanged in the pre-market and unchanged yesterday. Went up a little bit, but this has the lower high as well. So that leads me to think there's a good chance that this support is probably going to break. All right, let's go look at some of these other sectors here. Now this had an up day, but we're still on a downtrend. So this is our technology sector. And this is really a good chart for seeing how all these levels are important. I mean, look at that. Support, resistance, resistance, support, resistance. I mean, you don't need to be a chart guru or ninja trader to see that. Support, support. So this looks like it's got some room to go, if you ask me. I don't see anything that looks like it's going to be meaningful support until we get down to around 163.50. So that's 4 points, which may not sound like a lot, but that's probably 3 or 4%, right? Or yeah. All right, so that's that. And we got to look at our financial sector. Remember, we just looked at the industry. And I said that I don't think that this ascending triangle is going to play out, because I think that interest rates could move higher and then all bets are off. I mean, not all bets are off, but I'm just thinking that these patterns don't always play out perfectly. So I think the fact that there's a chance that we're about to see a dramatic rise higher in interest rates probably trumps this pattern. All right. So why do I say that? Well, let's go look at our 10-year yields. And I think this is between that banking sector and this, it's like that's all you need to watch to know which way this market's going to go. All right. So basically, if bank holds, we get maybe a little bit of a rebound, or maybe we just stay flat. But if this starts to break out, if these 10-year rates go higher, that's going to be bad for the market. And that would be a 15-year high. And everyone kind of watches the 4.35 level, which is pretty much right where we are. So I think an interesting thing to understand here is that people aren't actually trading these interest rates, right? I mean, how would it be possible that if interest rates are just part of the economy, you can get this same phenomena? What was an interest rate here, or what was resistance here, turns into support over here. All right. Now, how could that be? And how could it be that resistance here became resistance over here? Because it's just an interest rate. Why does it look like, why are we seeing the same patterns that we see in equity charts? Well, the answer is that what we're looking at is really not, well, I mean, it is the interest rate, but it's really the inverse of the bond. Rates don't trade, but bonds do. So now let's think about this as a bond. Now, all of a sudden, this kind of makes sense, right? You get people buy here and the bonds go lower, and it's like, oh man, I'll sell if I can get out. So it's the same thing that happens in the stock market. You see in the bond market, support can turn into resistance. And then look how the resistance stayed intact for so long. So this just is, the government probably shouldn't be toying with interest rates. They should be letting the market determine what happens with interest rates. But this, to me, looks like there's a good chance it's going to go lower. And for the reason I just kind of talked about, right? Look at the lower highs. So, I mean, all right, so we'll start, I guess, here. So this high is lower than there. This high is lower than there. This high is lower than there. And this high is lower than there. So looks to me like my guess is that this breaks. That's going to cause, remember, this is the bond. The bond's going to break. And a lot of times when we break support, we get these rapid moves lower. And that's because what is support? Well, it's this large group of traders who want to buy. if the support breaks, meaning is if the price trades below the support level, it tells us that the traders who wanted to buy are done. They're out of the way. They either finish their orders or maybe they cancel their orders. But regardless, when you take demand out of a market, it sets the stage for the price to move lower. And there are a lot of investors or traders who were probably thinking about buying in here, and they say to themselves, oh, listen, the last time it got down to support, it was there. So I better raise my price I'm willing to pay to get to that same level. And that, if that happens, you get this like kind of air pocket of buy orders in here. So when the sellers come in, they have a hard time finding buyers, and that causes like a rapid move lower. All right. So very important to watch here is this. So this and the banks, I think, are the two really important things to key in on.
So if that breaks to the positive, I mean, he obviously can't change interest rates. No, I mean, he has to change interest
well,
rates.
they're talking. Well, they mess with the federal funds rate.
Oh, okay.
This is determined by the bond market.
Okay.
So the federal funds rate is like the rate that banks lend to each other overnight, I think. I forget the exact definition, but yeah, so that's what that when they're doing this stuff, they're changing the federal funds rate, and then all the bond markets all kind of follow along. So if you were to look at the chart of the federal funds rate, it would just look like a staircase. Let's see if they have it here. Fed, effective federal funds rate. Let's see if this is it. Yeah, all right. Now you see, so this is what they play with. And notice I say the term play.
Right.
So here are the rises. So here are the cuts. So this is the COVID cuts, which I don't really exactly remember what they were. But then this is when we started raising. So this rate is not determined by the market. This rate is determined by the government. Whereas the 10-year yield we were just looking at, that's determined by the market. But the markets tend to follow what the government policy is. But they just don't do it exactly. I mean, if you look at the 10-year yield, see how like it's all this like choppiness in here.
Mm-hmm.
It would probably be better or more traditional, I should say, to look at it like this, because it's a yield and not it's not something that's traded. This is just the yield. It's not the bond. But you see how like, whatever volatile this is. And then whatever, I guess I didn't say. And then the rate looks like a staircase, right?
Right.
Because this is not, actually it's inverted. All right, now let's see what else we got to look at here. We'll go over to our healthcare sector. I'm glad that they're going after Scam Bakeman's Freud's parents.
They needed.
I'd like to see him in jail.
They needed.
They should go to jail too.
Yeah, they should. They
should get disbarred. Because you can't tell me they didn't know something was going on here. All right, so here's healthcare. It looks pretty weak again. But look where it found its bottom yesterday, right at this former little bottom here. But, big sell-off like this hasn't really rebounded. And this is a lower high as well, right? We had this high is lower than there. This high is lower than there. And this high is lower than there. So maybe not your classic or perfect descending triangle pattern. But, it's not that we're not looking for exact patterns. We're looking for the principles that the patterns illustrate. And these lower highs could be an indication of big sellers becoming more aggressive. All right. Now we looked at Lilly yesterday. Let's look at that again. Yeah, I think this thing has made the turn. Again, here's another, like what we call action. It's one of these undefinable things. So you get this big sell-off yesterday. And if you'll notice, this day here was the biggest sell-off, down 2.7% that I can see on this chart. So this is kind of an unusual move for Eli Lilly. It doesn't usually move this much. So this looks like the trend has kind of turned. And so we've had 3 down days in a row. And this morning, there's no kind of rebound there. So that is one of those things that we call action. You can't really quantify it, but I guess it's like, I don't want to say an intangible, but you know what I mean? It's like if a company reports earnings that are better than estimated, but then the stock goes down.
Yeah, bad action.
That's just a sign that despite the fact that the earnings are good, there's still more people interested in selling than buying. And as traders, we don't really care about numbers and earnings. We care about supply and demand. And are there more buyers or are there more sellers? Because that's going to tell us which way the price is probably going to go. So here's our consumer discretionary. And we can see this is another thing that got to resistance and then sold off. And we can see our resistance here become support. This chart, we got a lot of good lessons on it too. Here's our fast move up, fast move down. This happens because when you gap through these levels or you move really fast, you don't get a lot of time for there to be these sellers who are going to be trying to buy their shares back on the way back down. Right? So if you're in a range, you get the same kind of a thing going on, but the price spends, or the shares spend a lot more time at a lot more price levels than here. Here, the shares aren't really spending that much time. So you're not getting this big kind of vested interest built up here. So you can see this on a lot of charts, right? So here's our fast move up, fast move down. And then if you come over here you got your fast move down and your fast move up. So this is, a good thing to know where these things happen, because it just helps you come up with ideas. If you see something is falling into a price levels where the last time it was there going on the way up, it ripped through the levels or it gapped up, well, then the odds are probably better that if you're right, you're going to make profits quicker, as opposed to if something is falling and it's reaching a range where there was a lot of prior trading. You know what? I think Bitcoin is actually a good example of that. All right, yeah, so look at this. So see, now this is, remember, even though this is Bitcoin, right? We looked at bonds, we looked at stocks, we looked at ETFs. We see the same patterns in them all. And that's because what we're looking at is human psychology. Now here, let's see, what do we got? Well, here you can see support here converted into resistance over here. You got, well, resistance back then became support, but it'll stay closer. But here's your fast move higher and your fast move lower. Now, when something's in a range like here, you got the same emotions going on. You have buyer's remorse and seller's remorse. But because we just spend a lot more time at these price levels, then there's just a lot more people that are going to be interested in either buying or selling. Now here we have, look at this. So we got our fast move lower, and then we stay in a range for about 2 weeks, and then we get a fast move higher. Why did we get a fast move higher? Well, because you didn't have a lot of people. There wasn't a lot of time for there to be people buying here who are going to be trying to sell on the way back up. See, here there was a lot of time. I mean, we spent from the end of June until the end of July with this being support. So there's a lot of people who bought who became remorseful when it goes lower. Now, when you rip through all these price levels here in a matter of like 2 days, you don't have a lot of people to buy. So now if the price starts to reverse, well, guess what? There's not a lot of remorseful buyers trying to sell. So the buyers have to push the price up if they want to get their Bitcoin orders complete.
You see
and
this
then we
on
get
housing?
up here, and whatever reason, the sellers overpower. And because we moved up so quickly, there's not going to be a lot of remorseful sellers trying to buy. So you get your fast move up, fast move down, fast move up, fast move down. Pretty cool.
Mark, did you see this on housing?
No. Wow, that looks like a lot.
That's a lot.
Do we know what the estimates are? So this UAW is going to strike more on Friday, I guess.
Yeah.
I'm just looking to see if All right, so let's think about this. So housing starts, if that's really slowing down, that could be good for the market, right? Because people will say, all right, well, if we're slowing down, then the Fed doesn't have that much. It was 2% in July. So, all right, let's just see. First of all, let's see. If we're at the news, let's go see if the market's moving on it. And it's not. It's well, like I said, it's going to be a quiet day because of the holidays. But basically, SPY is pretty much unchanged in the pre-market. All right, so let's see. Well, I guess we'll have to give it a minute for someone to pick up on this. Actually, maybe it's on the Benzinga site. Let's check that out. Benzinga. Democrats put pressure on the UAW.
I did hear a nice statistic on government shutdowns. You know that only 85% of the government still gets paid for. There's only 15% that gets deferred, but they still get the payments. So a shutdown is basically just a political theater.
Yeah, they're not going to shut the government down.
No, they never do.
But what happens is they shut down like the national parks and
the border patrol. They get the ones that we need, but that
yeah, right.
The unimportant ones, those ones don't lose the money.
Dude, I'll tell you, man, this stuff's going crazy up here.
I just can't believe trains with the migrants in it coming through Mexico, man. I mean, come on. Now we're using trains, planes, and automobiles as quick as we can. I thought they were walking.
Well, there's all kinds of stuff going on in the city, man. There's like they're talking about putting 10 cities in Central Park. Staten Island, which is part of New York City, it's one of the 5 boroughs, is talking about succeeding from the city, which I think would be pretty funny if they did.
I don't know. They got no representation. I mean, that's pretty liberal, a bastion of liberal policy there in New York City. But
there's 350 million people in our country, and 50 million of them are here illegally.
Right.
That's a pretty high percentage. I have a friend who was telling me that his aunt, he's actually Indian. His aunt spent like 3 years in India waiting to get in. It took her 3 years to get in, and she's like 60 years old. I think she's a doctor. Yeah, well, I mean, I don't know, man. It's as a taxpayer, I can tell you it's pretty annoying to see other people like get stuff for free when I got to work and pay taxes. You know what I mean?
Look, man, I'm still upset about Hawaii getting $700, and we got Zelensky standing in here right now demanding another $1 billion or whatever he's going to get here this trip that he's made to the UN today. And it's just really a joke that they keep funneling our money somewhere else when we have Americans that are hurting, and it's not fair.
Yeah, it makes you wonder. It makes you wonder. All right, let's see. UAW says deadlines. God. All right, let's just for the hell of it, let's just look at some of these auto stocks, which surprisingly they're not really moving that much yet. But I guess it's really just kind of a minor shutdown so far, in the sense that I think they're only doing like one plant for each company. But I guess if they don't come to some kind of arrangement, then on Friday they're going to be from other striking at other plants. So this is going to add more to the inflationary picture because this is going to make the price of cars rise, right? So I mean, eventually you got the company's going to settle with them on some agreement, but then in order to meet that agreement, they're going to have to raise their prices, and that's going to make cars more expensive, and that's just going to add to the inflationary environment. I mean, I don't really know enough to kind of say what's going on because I'm not an auto worker, but I just think it's like, come on, man. You want to work 4 days a week? Like, I mean, it's like, all right, so wait a second. What is that? All right, so we want to get paid X to work 40 hours a week. Oh, and by the way, we're only going to work 32 hours. It's like, it's like, gee, that's quite the math that they got
Listen, if you
going
do
on over
4
there.
days and you do 4 10-hour days, now you're talking. I mean, that saves electricity, that saves everything. But to have
Yeah,
that's just crazy.
it's just so. I mean, how are you going to compete if you're working 4 days a week when there's other companies where they're working 5 days a week? So I don't know, man. Just more craziness. All right, so look at this. Chevron CEO predicts crude will return to $100 a barrel. I suspect oil is going to keep going up. I'm just saying at 93, you'll probably see some profit taking. But anyway, let's see what the guy from Chevron says, because he would probably have a good idea. Let's see. West Texas. Chevron CEO told Bloomberg on an interview Monday that crude looks likely to reach $100 a barrel, a level it hasn't seen in more than a year. Supply is tightening, inventories are drawn. These things happen gradually. The trends would suggest that we're certainly on our way. Yeah, I mean, I think considering what we're seeing in all these other kind of inflationary things, it's not surprising. Let's see what copper's doing. Sometimes sometimes you get insight into inflation by looking at copper. It's not really doing much. It's actually been kind of trending lower. But the big one is the oil, because every company needs oil. So it plays through everywhere. With gasoline prices, diesel fuel prices. There's a little bit of a descending triangle type pattern here. So we got our support down here. Then we get this descending type pattern, and then what happens? It broke the support. All right, let's see what's in the news. Other stocks here. Still haven't seen estimates on this housing starts, but that sounded pretty low.
Here you go. Heather put up the building permits for you. And if you guys get a chance, smash the like, share with your friends. Thank you very much.
Yeah, it'd be nice to have a 4-day work week. It's like, come on, man. Because it's like, if they want to get a 4-day work week, then well, guess what? This union is going to want a 4-day work week. That union is going to want a 4-day work week. And, I mean, I'm sorry, but I don't think these people really work that hard. I mean, it's not like they're busting their asses, working all kinds of overtime, working on the weekends.
No.
So sorry for sounding like a robber baron, which I'm not. But it's like, you got to be kidding, man. Everyone else works 5 days a week, regardless of what you are, right? And I think some cops work like 4 days on, 3 days off, and it continually rotates. I think some people in the medical industry do that too. All right, let's go see. Really, yeah, not too much going on. It's because of these holidays. Tomorrow's probably going to be a pretty interesting day.
So when is Yom Kippur?
Well, it ends tomorrow, or it's Rosh Hashanah. I think I'm not so sure. Is it Rosh Hashanah today?
Yeah, you sell on Rosh Hashanah and buy back on Yom Kippur.
Just want to look at the volume here. Yeah, so I mean, so look at how yesterday's volume was so low. Not like incredibly low, but low enough to know that it was something. So like this here is like the day before the 4th of July. You can kind of tell where the holidays are. All right, I'm going to get going, everybody, and I'll be back tomorrow, and I will hope to see you all then.
Thank you, guys. Have a wonderful day. Good luck trading.